Hello, hello. Good evening, everyone. Good evening, viewers online, and those who will be eventually coming. Welcome in advance. So, in this session of Enterprise Wednesday, Mr. Naysan who is the co-founder of Money Match, will be providing his insights on how to pursue digital entrepreneurship based on his wealth of experience as an entrepreneur in the fintech industry. He'll also be sharing his knowledge on the best ways to raise funds for your startup and how you can ramp up your growth. So, just a little bit of background about our fellow speaker here. Once again, he's a founder of Money Match, a multinational fintech startup focusing on cross-border payments. Currently, he also serves as a managing partner of a private investment firm, TH Capital, at Money Match. At Money Match. He drives efforts across multiple core businesses functions from product to business development, and leads the team with extensive experience in the banking and finance industry rather. He holds an executive MBA from the University of Strathclyde, if I hope I pronounced that correctly, Glasgow. While his previous experiences include serving as an executive director in Goldman Sachs in Hong Kong, that is, and the CEO of Pitch in Malaysia's national crowdfunding platform. He is both an entrepreneur and a venture capitalist with significant involvement in fundraising and investing for startups in Malaysia. And now you can take the table, Mr. Naysan.
Thank you very much for the introduction. I can't remember half of all those kind of things that you mentioned, but yeah, so it sounds pretty good, I guess. But so I guess I'll take you guys a bit of a journey together about how I and together with Adrian, my co-founder, we started off Money Match, and I guess what it takes to be a digital entrepreneurship, takes to be a digital entrepreneur, and the kind of like things the guys should take note of and basically try to absorb in your own potential future journey, right? So I guess you can put up the slides. To keep up. So I will start with a bit of introduction. I will give a bit of an example, and then basically in about half an hour or so, and then we go to a bit of Q&A. Can you guys set the slides? All right, great. Thank you very much. So yeah, what is Money Match, right? So I bet the majority of you guys haven't heard about us per se. We serve more of the B2B and the SME sectors today, but we are quite, I guess, a popular fintech over here in Malaysia, primarily due to our participation in the Fintech Sandbox. And today we have graduated. We are the first ones to graduate in terms of a fintech startup. And today we run a multinational business across quite a few different countries, with about 80 full-time staff at the moment. So yeah, so I guess even going back further beyond that, because I guess today's session is not so much about financial technology, it's not so much about startups per se, but it's actually more about entrepreneurship. Correct me if I'm wrong, William or Divesh, right? But it's supposed to be about entrepreneurship, right? And I guess the thought process and the kind of thing. So when you talk about digital entrepreneurship, for me, it's very simple in the sense whereby it's just entrepreneurship, but you're taking and using a channel of digital rather than brick and mortar, right? It's not really something that's a big deal per se. There's also a lot of people who do hybrids, brick and mortar and digital, which is very different than purely digital, mind you. Right? It's very, very different. You don't see branches of Grab shopping around in shop lots here and there per se. They're one big HQ, and so on and so forth, right? It's very different when you want infrastructure-heavy businesses or physical brick and mortar. So digital is digital. So then your thought process, how you do things, you think of a business doing regionally, globally. That's a lot of those kind of nuanced differences. Is you talk about digital entrepreneurship versus normal entrepreneurship. So I'll say that normal entrepreneurship is both brick and mortar, or even hybrid brick and mortar plus digital is still, entrepreneurship in general. But when you talk about digital only entrepreneurship, that's a different mindset. You're going to develop your products, user experience that's more global in thought process rather than on a singular country, or so on and so forth, right? Compared to, let's just say, if you're doing it for brick and mortar, of course, you cannot be expanding out in 50 countries overnight, right? You start off in one country and you expand out step by step across the region. Compare that to a digital only, Grab or Shopee or so on and so forth. Bam, overnight you're going out to multiple different countries, and your whole mindset changes how you hire, and so on and so forth. So yeah, I just want to talk a little bit about digital only versus digital entrepreneurship, right? There's no right and wrong. there are a great many brick and mortar entrepreneurs who are far more successful and wealthy than I will ever be in my entire life. That's a fact of matter per se, right? Of course, you can look up to people like Elon Musk, but even Elon Musk is not was a digital entrepreneur. Today, he's actually a normal entrepreneur, right? Because what is SpaceX? What is Tesla? Right? They're physical cars, factories, right? They're actually relying. He's actually going back to his hardcore engineering days, right? So for all the science students and science geeks per se, your engineering degrees can pay off. And today, he's the world's greatest entrepreneur. He's just an engineering grad, man, making cars and making things electric, right? So we talk about entrepreneurship, and not to put any disdain to anybody who is studying bachelor's of entrepreneurship. But where I'm getting at is that you don't need to study a bachelor's of entrepreneurship to be an entrepreneur. It's pretty open, man. It's pretty open. You can be an accountant, you can be a lawyer, you can literally be multiple parts to it, right? And there's a great many successful digital entrepreneurs who come from a variety of different backgrounds. Some of them engineers, some of them consultants at McKinsey or BCG, for example, one of those big top names. A lot of top startups. I'd like to hire from them. Even Nadim, the founder of Gojek, also came from one of those top consulting shops as well. A lot he surrounded himself. Even at even Grab early days as well. A lot of the top people were all like McKinsey, BCG guys and whatnot, because those are young, hungry guys. They didn't study a bachelor of entrepreneurship. They probably studied some funny degree in whatever else it is and got their ways into McKinsey, right? So just giving you guys an example of entrepreneurship in real life. And it's not really got to do directly, I need to study a bachelor of entrepreneurship and then do it, right? But you can also study a bachelor of entrepreneurship for those guys who are studying that right now and also be a successful. But there's no fixed formula. Is what I think is the most interesting thing and the dynamic thing about this at the moment, right? There's no fixed formula to success. That also means that it's open and fair game for everyone. And it's really about how you use your particular talents, skills, or education to bring yourself forward. One famous story I would like to remember is of Steve Jobs. Obviously one of the greatest entrepreneurs, but you know that he was actually one of the original creators of what today, when you guys use Microsoft Word, all the different type of fonts, you know that Apple was the first guy to develop those fonts, and Microsoft actually copied them after a while, and so on and so forth. And there's a bit of fight on the patent and whatnot. But it was actually Steve Jobs who developed that. And even though he was a university dropout, when he was still in university, one of the courses he took was for some kind of like lingual arts or something like that per se, and he developed that. He developed those kind of fonts that greatly increased and improved the user experience of the early 1980s Macintosh users, thus giving them a massive cult status. Until today, every single major design house, graphic design artists, they use the latest iMacs. They don't use Microsoft till today, right? Because of that kickstarting point, right? So, how and why, right? It's random, man. Some random guy starting, studying lingual arts or whatever else. He just became the co-founder of one of the greatest tech companies in the world. So again, back down to it as well. It's a great marriage of skills, required, and sometimes to create that unique selling point. I'm sure you guys always hear about the USP, but there's no fixed formula to it, and that's really one of the nice things about entrepreneurship. And digital entrepreneurship allows a slightly lower barrier of entry depending on what kind of sector you're looking at. Financial services sector is a bad sector to look at in terms of barriers to entry. It's a high barrier to entry, generally speaking. But aside from financial technology, there's so many other kinds of businesses you can do. From absolutely nothing during the pandemic days just 2 years ago. If you guys were hardcore hustlers, you could have started an e-commerce drop shipping company per se, and today you'll be successfully earning, maybe $1,000-2,000 per month, and keeping running your Facebook campaigns per se. Dropshippers, man, dropshippers. It's like what kind of skills you need? That's a digital only entrepreneur, right? So that's an example per se of what is digital entrepreneurship. The story I'm going to share, obviously, on Money Match is very much on financial services, financial technology. It's very specific in that sector. That's my particular specialty. Basically leveraging off Adrian Yap and myself, leveraging off our own particular talent, skills, education, working experiences to then create something which is relevant and leverages off our own base of knowledge, and to take us have that unique selling point versus other guys who's going to start in this field of sector without any relevant experiences, right? So just having a bit of a money match. What are we and what we do? We help people to do cross-border payments, remittances. So whether you're an individual or whether you're a business, you can use this to send money overseas. All right. So how this first started off is that in the original day, we didn't initially focus on B2B. But today, B2B is 80% of our entire business and the major driver of our continued success and growth. Even in terms of digital banking, we're focused on the underserved SMEs and whatnot as well. But when we started off in the year 2017, we were only looking at the C2C market. Another example per se of, the amount of pivots and changes and evolution. I say I don't really believe in pivots in our money match per se, because we still stayed in the remittance cross-border space. But what we do is that we evolved. We evolved together with the market, understanding of the market, and then only we started focusing more on the B2B to the C2C space, right? But in the original days, there was a problem which I particularly identified, which I used to work in Standard Chartered Bank Singapore, and I always remember that we never used the remittance companies to send back money to Malaysia or whatnot because of the fees, the charges, or we never use the banks, right? Even though we are bankers, earning very good salaries and all that there, if we have a few thousand Sing dollars or whatnot savings, before we go back for a weekend back in KL or for a party or whatever else it is, we will still go to the money changers, man. We'll still go to the money changers, get that freaking, 12, 13,000 ringgit. Because it's a small amount technically, right? It's below 10,000 US, right? It's 3,000, 4,000 Sing, whatever else it is, and you still bring it back because you get the best rates that way, right? Even till today, you still go to Mid Valley Mega Mall or go and line up down there to get the best money changer rates, right? So it was like, this is kind of silly, right? And what actually was that? Why can't you do this online? It's kind of silly, right? Like in the year 2015, year 2017, it's not as if internet was alien technology, right? Come on, man, it's like people already doing stuff all the way through emails and shopping online and whatnot. But yet, this kind of particular space over here, why were the physical money changers offering so much of better rates, right? And then started understanding a bit more and there's a lot of infrastructure costs, remittances, and blah blah blah, and I'm not going to get that, right? But then they're like, okay, this is the reason why you can't, right? Because when you talk about like Western Union, for example, you're talking about I don't know, a 200-year-old company or that kind of legacy infrastructures and so on and so forth, right? So with that in mind, we explored out that what's actually the solutions out there, and then we saw in the UK and the US and Europe there were already startups exploring this space, growing in this space. One particular startup that became very big till today is called TransferWise. Today they're just called Wise, if you guys heard about them, WISE. They're pretty large in the space of remittances. They all come from the UK, and they basically identified the same problem in UK, Europe. It's pretty expensive, moving funds between UK, GBP and Euro. It's quite silly if you think about it, right? But it's pretty pricey. So they have solved that problem, peer-to-peer, currency exchange per se. We also the same top process. So they launched it out over there. They were slowly starting to grow. They were only raising their Series C by that point of time, really early days and that kind of stuff. And myself and my partner thought, hey, man, before these guys come over here to Southeast Asia, their concept of what they're doing is exactly what we see as a relevant solution. So honest to God, we're like, okay, let's start off something not too far off, right? So why we did that as well is that you got to understand when you want to talk to investors, when you want to talk to early people to believe you on, right? It's nice and easy to study theoretically. They're like, yeah, I want to come up with a brand new business model nobody's ever heard of and all that. The reality in real life is that a lot more people are more intelligent than yourself. A lot more people are more intelligent than even me. Way more intelligent than I will ever be, right? And yet, they are not that wealthy. They are not that successful, right? You get where I'm getting at, right? You think they have not tried these ideas before? They probably have. You think some big corporation with innovation labs, you think all the big corporates don't have Google innovation labs? You think they've not tried such ideas? They probably tried it out over multiple times as well, all across the globe, and probably face multiple different problems. So you think theoretically it's easy, but your go-to-market strategy, you think it makes sense in your head. Actually, in real life, there'll be so many new obstacles, challenges. Your go-to-market strategies will fall flat on the first day, that kind of things per se, and nobody really scales up per se. You find, 10 different money matches in Malaysia, you don't, right? There's only one of us, right? To brag a bit, right? There's so many obstacles and challenges to getting started. It's easy to say, yeah, I also can do this. What is that? Peer-to-peer, bank transfer to bank transfer. Any monkey can do it. Yeah, go ahead. I'll see you. So that's the reality. It's a lot of challenges, regulatory compliance, anti-money laundering, so many things you got to take care of, man. It's easy just to talk about it, right? When you go in real life, scammers, fraudulent, man. Wow, your cybersecurity, so many things to talk about, spend money on protecting yourself. Yeah, so it's a lot of parts of the business. It's easy to talk in an idea, right? So then you see, actually the market is not as big as I thought. So that perspective. So now, taking all that learnings, right? This is what wealthy, smarter people that and talk about. So when you go to them with a validated business model that maybe has not yet grown mature yet in your own country, Example being given, transfer-wise, not yet in Malaysia. Even if they come in over here, they still be brand new. It'll take a while to go over there. But it's a validated business model in UK and Europe. They're growing against skills. They solve the business gap. Same business gap over here in Southeast Asia. Nobody's solving it at scale yet. Then the investor's mindset will think a little bit, oh, okay, that makes sense. It's a validated business model. It's just these are new right markets here in Southeast Asia. Straightforward as that, right? And then you don't have to oversell because you come out with some brand new thing nobody has ever heard of, And that's all nice to talk about, but in realism, it's not really, what's going to get you your funding and your first bit of seed capital and whatnot, right? So that transfer-wise thought process, that transfer-wise ideas when we first started off to take off. And basically, when we start off in Malaysia, we started saying, oh, wow, it's a very, very different kind of market. We had a lot of early pioneers using us, loving us, like, wow, I really love you guys per se. But they were in the tens of thousands. They were in like the hundreds of thousands and whatnot per se. And then that's because in the real market per se, we started understanding, that the operational challenges, the compliance challenges, the regulatory challenges, they add so much layers of cost to your business and how we have to go about it and so on and so forth. So there's a whole massive journey that will take me like, a 2-3 day lecture or maybe an entire fintech course over 6 months with an exam and a thesis. I wanted to bother to go through the entire basic parts about overcoming and going through per se, right? But that's basically, how we grow and we identify the business gaps in the B2B was stronger. We gained much more better profit margins in the B2B sectors. We were serving underserved SMEs as compared to underserved individuals. Started growing at scale over there. And today we're the single largest non-bank, B2B payment provider for cross-border in Malaysia, right? It's something like we really harped onto it and really build it up all the way through, right? So spending a bit time about our journey. There's a picture of Adrian and myself. I think I was a little bit more fatter that time, but yeah. Yes, go ahead, William.
Just have a quick question. From your About Us page, I actually looked at Australia. You said you're operating in Australia, and then I went to your website, was scrolling, and I saw you've made transactions of over 4 billion secure transactions with customers, if I'm not mistaken. So you're giving customers, you're offering customers better rates than banks, or maybe just as good wholesale
faster
rates.
And cheaper.
Yeah, cheaper. So faster I'm just curious, how do you make your money then?
How do I make my money?
Yeah,
we don't really make much money. All startups lose money. No, we do make money. We make money on the margin, the spread margin between what we get from the wholesale banks versus what we charge to our customers. But what the banks charge is a lot more higher than that. And when you say that why can't the banks compete against us, that's because the banks have a high infrastructure cost. For example, we use blockchain, they use Swift, which is another 200,000-year-old technology, right? Since the time of the Egyptians, So, that kind, they use Swift technology, right? All banks use it, right? So telegraphic transfers, we're like, telegraphic transfers, Jesus Christ, man. Blockchain, man. So that's an example per se of how our spreads are a lot more cheaper compared to the banks, but we are sustainably cheaper because we don't have physical branches, we don't have the telegraphic transfer costs and so on and so forth and all that. We still have unavoidable costs like compliance, anti-money laundering. All those are still very heavy costs, operational guidelines, and still endless amounts of cybersecurity stuff. But all those cost layers basically is still way lower than the bank because the bank has to pay electricity bills, the bank tellers, and this is a totally different business model. But actually, it is not too far off from Wan Utama versus Shopee, right? Shopee is able to compete prices continuously, even subsidize the logistics, purely because, when you don't pay electricity bills and air conditioning bills and breaking down maintenance and your rental leases and all that, the business model is very lean. And that's our business model as well. That's how we make money, long story short.
Oh, okay.
Yeah, and our model and the mantra is you cannot keep it too overly complicated or overly sophisticated to the end user. So to the end user, it's just faster and cheaper, right? What we do on the back end is bloody complicated, very complicated, right? But to the end user, faster and cheaper. Minimal UX, simple mobile app, transfer, FPX money transferred over to us, boom, money is reaching literally instantly to our blockchain countries like, India and Philippines, Indonesia, within Asia Pacific, whatnot as well, literally within seconds. So yeah, from that perspective as well, that's our business model. The differences as compared to the traditional model, we are taking cash. If you're traditional, if you're a foreign worker, you work in a plantation or you work in a construction site, very common. You are paid physical cash. You walk in every Sunday, to your physical cash to the money changers and remittance companies and sending money back per se, right? It's a very different business model in that sense.
Okay.
Please, Tobias.
Sir, I have a follow-up question to Williams. Since you said, banks charge a lot for, transferring money overseas and all that. I got a question. Will fintech replace banks in the future? In, like, let's say maybe 20 to 50 years, if such, banks are charging, you know, super high rates, whereas compared to like you guys, you're charging the average person less. Do you see fintech taking replacing banks in the future?
I hope so for the sake of my children's education. Or not, they all be studying local grads over here. But yes, obviously that's the call. So I'm obviously very biased to say that 1000%. Yeah, of course. But actually, you gave a pretty good timeline. It's not going to be 2, 5 years, and 10 years. That's not really realistic, right? A 20, 30-year timeline is a lot more realistic. But not to replace, you'll be very surprised. I think that a very interesting word that I'll use is democratize, right? It's like basically what it means is opening up the market that ever before. But
Yeah.
what this means is even at today in year 2022, we are seeing it. 10 years ago, my dad didn't even, when I was studying overseas, for example, he didn't even have the opportunity to use a money match. Didn't even have a chance. He couldn't even use a traditional guy. He could only use the bank to send money out to the UK or even Australia, wherever. Only the bank. There was no other choice. So that's the first step. So today there is now a choice in the first place. The bank won't really go away, but what will happen in a good timeline of 20 to 30 years? So the next 2 to 5 years, I won't see much change. 10 years or so will really be limited. But you're right, 20 to 30 years per se, you will see the steps. But banks actually will become very much digital, very integrated with certain service providers. Even right now, for example, in Malaysia, we talk about digital banking. So, there are 5 that just launched. Money Match is actually one of the 5 consortiums to actually win the digital banking license. So that's actually an example of, the direct challenges. So not really fintech, but digital banks itself, actually. Digital banks being powered by fintechs. So obviously, when the user of that particular digital bank does a cross-border payment or so on and so forth, everything will be on Money Match rates, Money Match level of service. So it'll be integrated in that level of service. This business model is not unique. In Europe, for example, a very popular bank called N26 as well, they were TransferWise as well, and the TransferWise handles all that treasury and cross-border payments and so on and so forth. So you'll find that banks, focusing on their primary business, which is lending and borrowing and lending, as well as the deposit accounts as well. You'll find things like not just cross-border payments like us. Another sector is like investment technologies. So those are like Stash Away, if you heard of them. Versa, those guys are up and coming as well. So those are the many new players as well. Touch and Go e-wallet to Go Plus is also considered an investment tech kind of a play as well. So you see, that's why example, like in the future digital banks as well, they cannot really compete. They might as well just work together. Let's just say if a Stash Away, and then the customers come in with why and get the best cost per the ways and get the best investment products. Yeah, then the bank being super focused, being much more leaner, unlike paying unnecessary costs, which a lot of banks today are doing. They can be focused on what they're doing, offer the best service, when it comes to deposit and lending, right? So I see that more as going down the path. You would never ever see names like Maybank disappear. That would not happen. But you see that Digibank, Maybank, whatever it is, 20, 30 years from now, being as good as a digital bank per se, working with their own levels of fintechs and so on and so forth. It's just that path of evolution. So what I see is actually more of change, right? And it's not seismic as in overnight, but when you take into the grand scale of banking has been around for 500 or 1,000 years per se, then you could say that this 20, 30-year gap actually between traditional banking, digital banking, what's powered by internet penetration, smartphone penetration, and then today further boosted by the pandemic, the global pandemic, which made everybody a little bit more digital than they ever were before, right? These are the kind of like factors per se that actually, made the period a lot more shorter to actually move and make that change per se, right? So like today, a 30, 40-year-old is already so comfortable using tech all the way through, right? A 40-something-year-old, right? So no disrespect to the 60-something, 70-something years old, but in 20, 30 years away, they'll probably be passing away, and then the
my dad's somewhere in that age gap. So I can speak for him. Yeah, I would agree.
Yeah, right? So when he is 70 years old, he'll be using a mobile app like so easy compared to a 70-year-old today. So that's what I mean by 20, 30 years per se. Yeah, when the world will be doing, our granddads will be like, swiping their investments, and moving funds and that kind of stuff as well. So that's actually more of that future, more of a evolution per se.
All right, thank you, sir. You can, how about you carry on with your presentation?
Sure. Yeah, I mean, like, I just spent another 5 or 10 more minutes before we move on. But yeah, it's a bit of our milestones and journey thus far. At the very beginning, I think that a lot of people ask us, how to get started. So just to touch on, how to get started. I think that for us, our own personal journey, I think that joining an accelerator firm was really, really good for us in that sense. I think that this kind of boosters basically allow us to take on more risk and get our business started as a startup, and expand ourselves out, right? So generally speaking, there are like accelerators, there are incubators as well. There are different kind of things that you can join in, as young students yourself, post your grads and all that. But I think that it's a good opportunity. Incubation labs and so on and so forth also are very good in the sense whereby, you're more given better direction. Maybe it's by a group, let's say like Sunway Group, they have their own innovation lab, you can join them per se. It's not just for the students, it's actually open per se. So large corporates as well has their own level of innovation incubation centers, where they look at corporate problems or bank-wide problems, and then they hire, youngsters as well to try to solve those problems internally as well. So that's actually a good place in that sense as well. Myself and Adrian, we're actually pretty experienced. If you've heard William's introduction of ourselves. So we're both bankers ourselves. So we're not young kids. We're already, like in our early 30s, when we were looking at setting up money that's basically from some shop. So, we have a level of experience per se. So for us, accelerator was the best fit for us, basically. Basic accelerator firms are for the next level, but we use our own idea, our own startup. We go present it up. They give us a small bit of funds, guidance, mentorship, and then we take that basically and try to take it up to the next level through a shortened plan, like within 3-month plan or 4-month plan, right? That's exactly what it is. We joined something called the Cyberview Living Lab Accelerator, which is run and organized by Watchtower and Friends. And that was pretty good for us. Even till today, the mentor that we got basically is today our chairman, and Azwan Aswarani, he also invested as well. So the impact of that accelerator for us is really, really good. Our first primary angel investor was also introduced from that pre-seed round was introduced from the accelerator firm as well. So, without all that per se, it's very difficult to get kickstarted in a structured manner. They provide a very structured manner to get yourself kickstarted. There are some good accelerators. There are some accelerators is a bit of waste of time. You guys got to do your own research about that. But obviously, Watchtower and Friends, WTF accelerators, they're just very fun guys. They call themselves WTF accelerators. So what do you think, man? They're obviously very fun guys, and they've got a literally validated track record of success, from the Lorry to Money Match to quite a few other household names of startups today that's raised the Series A, Series B, and so on and so forth, right? So there are also other good guys as well. There are other pretty lousy city accelerators, but yeah, definitely works for WTF, right? And so we went through that journey. It's really, really important, right? Because so we enjoy accelerators, and I'm just speaking from a direct journey per se, the digital entrepreneurs. So this is very relevant to digital entrepreneurs, right? Because there are accelerators out there. You get a group of buddies per se, come up with a business idea, find a software engineering student, to do some mobile app codes and all that. This is where you go, man. An incubator or accelerator firm. What to expect when you join an accelerator firm per se is really that the next level up, whereby you give it a bit of money and give it a bit of freedom, right? But then you're also given that timeline. So it gets real life, but it's no longer about universities or your thesis and all that kind of stuff. You can just delay. This is real life, man. Like you're being given money. You delay, if you screw it up per se, you can't go back to the same accelerator. You burn your name, man. You think about that, man. Right? You just simply do it, man. So you fail an exam over here, you get back your father and mother for a bit more money. Extend your semester. Real life is real life, man. You don't mess around, man. So this is why real good thing about accelerators. Give them much more responsibility, accountability, a little bit of money as well if you win. So at that time, for them, in that batch, there was something like 60-70 startups all applying for it. They only choose 8, right? So we actually managed to get into the top 8. You go to a judging panel as well. You finally get into it. And then so you start off in that per se, and then it's fine, whereby if you didn't get into it, so many successful startups failed in the first interview round, second interview round, didn't give up, went for the third, fourth round, hustled the way through, got into round 7 today, also raising the Series A, Series B as well. So yeah, it's a journey per se, for you to learn, so on and so forth. We were a lot more experienced, right? So we actually, they could actually see that we actually had the relevant experience to run the business. That's also pretty important. And then they basically gave us the trust, a little bit of funds, got our first mobile app out there. And then for us, basically, we managed to raise a little bit of seed funding and then ourselves started off. But we really didn't know where we were headed at. So we're still working our full-time jobs. We still have normal job, daytime jobs as well. We're working this on the nights and the weekends, figuring shit out together. And basically, it all changed roughly when there was a bit of change in the financial technology regulation. So depending which sector you choose to build your business or do your entrepreneurship in, there are a lot of different nuances to think of. Logistics is logistics, e-commerce is e-commerce, fintech, financial technology is fintech, right? Obviously, you talk about regulation, Bank Negara Malaysia, the Securities Commission, there's a lot of stuff to talk about. But thankfully, what happened here in Malaysia, in the region as well, generally speaking, in Singapore as well, Malaysia was like second in the race, was starting to open up towards fintech startups, towards startups coming into the place, right? But they didn't want the startups, to go and cause trouble and collapse, and cheat people on the money. So they create a sandbox, right? By a limited environment, you only can serve, a limited number of users, before you're allowed to serve a larger number of users and so forth, right? So that was really important because it's the first time whereby like a heavily regulated industry, like financial technology, financial services, actually get a way in without coming up with like millions of ringgits of capital and spending so much money in terms of like when it comes down to capital infrastructure, technology development, that all goes to burn and waste, if you don't really successfully launch it out per se, right? So that's actually where the sandbox came in, and by us getting into it, then we were able to convince investors. So it's a step-by-step journey, like we were able to convince investors, hey, we managed to get a conditional approval, to get into the sandbox, we managed to get it in, we presented it up to Bank Negara multiple times, we got their feedback, we improved our deck, got up to them as well, improved the business model, made it fit within the regulations as per what they needed, got into the sandbox, started building out the business. Still very C2C today at that point of time, right? Only after we started serving customers, we could serve like small businesses, we could serve like individuals, and we were just so focused on individuals all the time. But over time, we started seeing more and more small businesses, and they were definitely appreciating our level of service a lot more because they're being underserved by the banks, right? And long story short, we started hooking onto that. We started growing in massive amounts of scale. As I mentioned today, we're like 80 full-time staff. Counting interns, I think we have like 90 plus. I think we have my step as well. I think we're 100 plus people roaming around our offices across TTDI, Bangsa, Penang, Johor Bahru, Brunei. About 4 or 5 packs in Brunei as well. So yeah, I mean, it all started off from there, man. Literally over the 4 or 5 years. When the pandemic hit, the first part of the pandemic was pretty hard onto us. A lot of companies were doing pretty bad. So our customers were doing pretty bad. But we were actually already pretty big in the e-commerce space, and the e-commerce sector started growing so large it overtook all our other sectors per se. So today we were Shopee, Lazada, enabling their merchants to import goods from China, for example, and so on and so forth as well. We were with TikTok Shop for you guys, man. We were with many major merchants of TikTok Shop actually doing live streaming as well. But actually the goods come from China, right? So on and so forth. We're actually happy to do the imports and so on and so forth. But so yeah, it all started off there really. Step-by-step process, accelerator. So, so a lot of our investors like to call us like, a bit of a true blue startup because we really, literally, no joke, in the year 2015, there was only 10 PowerPoint slides. Literally, right? And there's no like a big family money or family name behind Adrian or myself to say. Obviously, we have our savings and our earnings for working 10 years in the bank, so we put those kind of capital in and so on and so forth, obviously. But it's not as if we come from like some large group, like Sunday group or something like that, right? Or even Grab, the founder came from a very big family, right? So if you didn't know that, right? So for us, it was just like starting out. So we really went step by step, and accelerated from first investor as well. Our mentor, we convinced our mentor Azran to put a little bit of money in as well, hustle him as well, put a bit of money in as well. Today he still sits on our board of directors, still our main guy. Is pretty good. He adds a level of legitimacy as well. A lot of people invest into us also because if Azran is your chairman per se, you guys probably have good governance. You guys know how to run the company, under his mentorship, so on and so forth. But so all this comes into play, man. Accelerators, mentors, your first investors to trust you, give you a bit of time and space, which is what our seed investors allowed us to as well. Then after the sandbox, we were starting to learn, understand the first 1 year or so, when we finally started to understand the market, even with us so experienced bankers so many years and taught so many things. Even then, you go into the market, you serve customers, you started making, oh my God, customers are happy with me, but I make no money. What kind of business am I doing, right? Oh, I started serving customers are happy. Oh, I'm started making money. Oh, okay, scale this part up, right? That kind of a part, right? So you learn business, you learn real life examples as you go on, you scale up your business. And once you hook onto the validated product, what we call the product market fit must be right. So for us, our B2B segment really hit that sweet spot of the product market fit. You can see them pump. You started growing per se because it's just when we started focusing on business development on the B2B sector versus fighting against Wise or Merchant Trade, this kind of traditional names and so on and so forth. We started just focusing on SMEs. We started only fighting against Hong Leong Bank, Public Bank, UOB, right? All those kind of guys, right? So today, 99% of all our customers are stolen directly from the banks, man. So it's a story directly that we're very proud and we continue on selling on, that we are outright bank disruptor. Every single cent of the over $4 billion plus that have gone through us have come directly away from the banks. What would have been traded with the banks have now been traded with us instead, thus saving the customers literally millions and millions of ringgit in real life savings, and also in a way taking also millions and millions of ringgit away of P&L away directly from the bank, right? So we are as hardcore a fintech as you like. We are directly see ourselves as anti-bank, hardcore attacking the banks. But saying that as well, surprisingly, we work with a lot of wholesale, bigger regional banks as well, strong names as well. There are a couple of local banks as well. They work with us as well, surprisingly. So it's a game whereby we also anti-bank, fighting against the bank. We have 1 or 2 bank partners. But today we have like literally 2 dozen over banks accounts across the world, right? From China, India, Vietnam, Philippines, over a dozen over here in Malaysia as well, in the Middle East, and so on and so forth. So yeah, it's really grown. We evolve, we grow as well. So yeah, we still fight the banks so much, but we also have like global banks behind us, regional banks behind us as well. They give us a level of service. All this is a level of evolution, learnings that we really take on the path as well. We try to surround ourselves with good people. That's a straightforward business lesson that very top startups do in the valley, in Silicon Valley, or even like to a certain extent in Singapore and so on and so forth as well. You get very good talents around you, because in our business of digital entrepreneurship, what is our true asset? HUMAN, man, humans. The ability of a human being to innovate, to think faster, to execute. Or my project managers or my software engineers from APU, Computer Science Division, shout out to the Computer Science Division, man, from APU to innovate, move faster than how a bank can launch is literally our golden assets that enable us to be a lot more faster. So obviously, at Money Match, we're 100 plus people, but 80 plus staff, 30, 40 plus, very long-term core staff as well. They're part of our employee share option scheme as well, growing together with us as well. The idea, all of us core team members growing our wealth together, hopefully as Money Match grow in valuation and grow in size as well. So those are the kind of journeys, paths that we take along as well. And still, honestly, pretty early days. We just won a digital banking license, together under the CAF Investment Bank Islamic banking license. Only be launched, middle, end of next year per se. So it's still a long way away. So literally, like there's another 3, 4, 5 more years of rapid growth that we'll be looking at as well, right? So yeah, so that's just my primary thing to say. And yeah, as I mentioned, our team as well. There's a bit of 90 packs, not including all the MyStep and all the interns. So I think we're about 110 right now, probably 112 or so per se. But yeah, our full-time staff is about 90 packs spread all across our different offices and regions as well. So yeah, with that, I'm more or less done with my presentation. Divyas and William, I hand it over to you guys for a bit of Q&A, and we'll take it up from there.
Okay, sure thing, thanks. I just, you talked about how you actually struggled in the pandemic. That, I don't know, surprisingly, I was caught off guard seeing the kind of business that you are, that really works with customers and I would have assumed would have their business booming during the pandemic, because the e-commerce was booming in the pandemic time. So what went wrong? What went wrong during that time that you couldn't?
No, nothing went wrong. I think everybody's memories are a bit too short, right? But actually, yeah, it's actually been 2.5 years of the pandemic, all right? But actually, if you remember back, the first lockdown is actually March 2020. That period is very bad for every kind of business, no matter what, other than essential services serving supermarkets. Remember the supermarket long lines? Nobody else is buying anything, man. Yeah, so nobody was buying beauty and cosmetics on Shopee and Lazada. No. That's all 2022.
Prices. Yeah,
that's all 2022 and 2021. The pandemic started a long time ago. So we suffered very badly in the very start of the pandemic. Nobody's doing anything. Why would anybody buy a makeup kit set in the year of March 2020 and April 2020? So the first 6 months of the pandemic in year 2020 was very bad for us, because our customers were doing very, very poorly. About almost 40% of my customers were front-facing retail customers. T-Life, for example, who was going to a T-Life? Right? I also have e-commerce customers and so on and so forth as well. And then in the early days, people were like cooking themselves, buying supermarket. The food delivery was not as big and hardcore as it is today. So much self DIY kits and that kind of stuff. So it was that early parts. But what happened was that by the end of the year 2020, we started having a massive boom. And year 2021, which was last year, was one of our strongest years ever. And right now, we've literally been growing continuously month on month per se. We have been about over 70-80% year-on-year growth. We are doing that. So for that's an example per se. So actually, yes, we have benefited a lot from the pandemic. We've grown a lot from the pandemic. But the first 6 months, actually, a lot of people forget how horrible it was. everybody was just at home. But say March 2020, it's a very long time ago. We've gone through 3 or 4 lockdowns. So by the second lockdown, people were like, yeah, buying beauty and cosmetics and buying the sports and recreation, buying running shoes. But in April 2020, my God, everybody was like, panicking and all that, staying at home, wearing a hazmat suit to go and buy bread. Now it's like maskless today. Yeah? So it's it's a bit about that. Yeah. So actually, yes, we did directly flow with the flow of e-commerce and everything went right. But the first part about it, of course, was very bad. And obviously, we don't really serve large names like supermarket brands and all that. They are different. We don't serve like the Jaya Grocers or the Tesco's. Those are not our target markets anyway. Those use banks directly and all that. We serve the SMEs.
Yeah, I was surprised with William as well, saying pandemic is not only, we normally think the pandemic from fintech or technology side will increase, but in this case it's not.
Yeah, as I mentioned that it increased. It's like literally 4 or 5 times than it ever was before. But you guys are forgetting the first few months of the pandemic and how it was back then.
Definitely. I just also have another question regarding, the Malaysian startup ecosystem. So there is progress with, for example, how the government is supporting Malaysian startups. The progress is there. Is it enough? That's what I want to ask you. Do you believe that it's doing good? Like, is the government, or is there enough support for startups, for the Malaysian startup ecosystem?
Sure, maybe I'll flip the question and say that there's too much support.
Sorry?
Maybe I'll flip the question and say that there is too much support.
Too much support.
Too much support. Wow.
Okay.
So yeah, I honestly believe that there is too much support. From my opinion, so Money Match is a recipient. We are very grateful of government support. We are both, from the accelerator firm all the way up to Cradle Fund. So we are actually very much a baby of Cradle Fund. Cradle Fund has directly invested into us, directly given us grants. That's why a lot of my hirings, we hired a lot of local talent from local universities over here as well. We really build up our technology team all here in Malaysia, data science team all here in Malaysia. So actually, I will flip the question by saying that like government grants and government support are irrelevant to success. Or the good beneficiary of the government grants and all that was APU students. Because I didn't outsource to Vietnam and I didn't outsource out to Pakistan or Thailand. I didn't outsource anything. Everything is built in-house. It's bloody expensive. All Malaysian engineers and everything is bloody expensive. The government grants and all that help me to keep that talent. So I would say that what the government is doing is 100% correct and relevant, but actually it's irrelevant to the success of a startup. The success of a particular startup, honestly, whether you give whatever amount of grants and funding per se, it's really nothing in the hell got to do with the end of the day, sort of per se, making profitability. Because at the end of the day, if your profit model, all that is wrong. Government grants are nothing more than silver spoons, which are actually not beneficial. It's anti-beneficial because what they do is that they create an artificial environment whereby you think you're doing good business, but actually the fundamental of your core business units may be actually losing money for every transaction that you do. That's an example of the bad parts about being paid. So no, I would actually say that there's any entrepreneur who starts off thinking that how much government grants I can get is going down the wrong path lah. Right? You're not really a real entrepreneur. I'll call you a grant-entrepreneur, whereby all you ever do is pulling out salaries for the next few years until your grants finish. Then you hire for a next grant and pull out salaries. You'll never build a 100 million ringgit company because your mindset is not right already. I want the independent man. The less support I have, the better, man. I don't want my father's money or government support. It's my privilege and my greatest benefit to build a company by myself without being hand-held and hand-fed and mouth-fed by anyone. So I just see it that way per se, right? And thankfully, my investors see it as well that way.
Wow, thank you, sir. So looks like we have a question. Could we bring up the question? All right, cool. All right, we have a question from Alvin Wong. He says, "Hi, in your opinion, when would be the most crucial process when starting digital entrepreneurship?"
Well, at the very start, right, I think a lot of people get it wrong, right? A lot of people get the very simple fundamentals of digital entrepreneurship or of any kind of entrepreneurship. So I'll answer this question in entrepreneurship way, right? The real way to do entrepreneurship is find a problem, solve the problem, scale the solution. Really simple, right? So easy, right? And yet 99% of startups will not follow this, and 99% of startups will fail. That's why you only hear about the 1% of startups, right? Because they don't harken back to the very simple thing. And so to answer your question, the most crucial process is at the fundamental starting point of why WH1. Why are you even starting your startup? And I can tell you the honest truth, when you reflect it per se, 99% of the time you're only starting a startup because you want to start a startup with your buddies, with your friends, or something cool, or so on and so forth. A real entrepreneur will find a problem, fix the problem, and grow the solution and scale the solution. It's not at all about wanting to be an entrepreneur. It's about finding the problem and then solving that problem. And then can you actually even scale up your solution to be regional and global to make 100 million ringgit or business or so on and so forth. And a lot of people will always, easy to say, but everybody be like, hey, Bobo, let's start up, let's do this, let's do that. You start up, and then you start to artificially create problems in your mind. Find problems, yeah, I think that farmer got problem, let's do agri-tech. Oh, let's do for fishing problem. Are you really a fisherman? Talk only. Have you ever been to a fish farm? Oh, what do agri-tech, agro-tech, everything you want to do, right? You read a book, you're not actually finding a problem. So I used to work and live in Singapore. I used to bring money back. I understand it, right? Yeah. You ever, as I said, you find a bunch of guys who do this, I got logic, right? So that's the reality of it. So the most crucial process is asking yourself why. Why are you doing this business, right? And when you do a business properly, per se, you got to think about the revenue coming in, sales coming in, and these kind of problems you will not think of if you're only thinking about starting a startup with your buddies and getting government grants. So that's the flip side to it per se, right? You got to ask yourself, why are you doing it per se, right? Like, yeah. So yeah, that is in my opinion, that's the most crucial. The foundation part of self, asking yourself why.
Well, Alvin, I hope you got your answer from Sir. Do we have any more questions? William, do you have any more questions that you would like to ask Mr. Naysan here?
I mean, honestly, you've passed your processes, the crucial processes like Alvin asked about. You're a big hustler. Honestly, you're quite the hustler, and entertaining one at that. And you've established something special over the past several years. So what's next for you and your company? What is
Well,
next?
the pandemic ramped us up in Malaysia a lot. So we grew by 4-5x, to the pandemic, e-commerce orders grew, so on and so forth. But the flip side to it is that that's the positive part of the pandemic. So as I said, the pandemic is positive for us. It's just the first 6 months where everybody suffered. But generally speaking, the last 2.5 years has been very positive for us. A lot of traditional business, which you never used us before, were forced to use us because, all the kind of solutions. Soon you're going to launch EKYC, electronically know your customer. Soon you're going to launch electronically know your business. So it's all very good for us. The real disadvantage to the pandemic to our company was the lack of mobility for myself and my team to grow the business regionally. So what happened is that we became very focused, we cannot travel, right? Very focused on Malaysia. So we started moving out to Penang and JB, hiring staff over there, which is very good for us. Really, really, very good for us. Eventually, growing our P&L, revenues, and now breaking even, we're taking the next step to making profits, so on and so forth. But now we have not yet grown regionally as much as we would have liked to over the last 2 years. So what's next for us is literally taking this and growing it out to a few more countries. They're already growing in Australia, but we want to go out to Singapore, we want to go out to like maybe Thailand, maybe in the further distant future, many, many years down the 3-5 years, Indonesia and even Vietnam. So yes, that's what's next for us. Fairly straightforward, but many, many challenges when it comes to regional expansion, overseas teams, management of mobile teams as well, overseas regulation, different languages. Yeah, there's a whole set of new problems that come out. So it's easy to say, yeah, I'm regional, but actually doing it is going to take a lot of time and focus and attention over the next few years.
Wow, that's very interesting, sir. I hope William, maybe Enterprise Club should make a trip to Mr. Naysan's office. What do you think?
He should establish a business in Kenya, my home country.
Regulation there. Oh no, that is difficult. But it's a problem. It's not. It's not easy. It's a problem. We know it is. It's not easy. That one, the solution is not so straightforward in Kenya.
Agree.
Well, I think there's one more question. Oh, there's actually two more questions. From Arches. I hope I pronounced your name right. His question is, what would be the top 3 things to be a good digital entrepreneur?
I'm really not sure myself. But as I explained to you, right, the nice thing about being a successful digital entrepreneur, you take all the examples from Elon Musk to Jeff Bezos to I don't know myself to everybody, the more successful billionaires, Anthony Tan, all that, is that they all have different backgrounds, all have very very different backgrounds per se, right? And there's no right formula to what to be is, like what it takes to be a good digital entrepreneur versus what it takes to be a good normal entrepreneur is really not too much different. The same persistence, the hustle, the thought ability, the level of intelligence, the hardworking part as well. But digital, basically, I guess the primary difference is having the right mindset from day one. So I cannot really say the top three things, but taking a digital perspective per se is that being more exposed is a very key part to being better digital entrepreneur trying to have a regional or global kind of a business, right? So, sometimes the lack of exposure per se, doesn't show you enough about you talk about, I want to make it regional, right? But then you don't actually have, educational experience or living, experiences or working experiences in certain countries and so on and so forth. Right? So I say that you want to talk about being a digital entrepreneur, you got to think of things from a larger scale, more of a white fool kind of mindset per se. There's no thing that I can say particularly as a particular three characteristics. I wish I had a right answer for that, but it's not so simple. But usually what I see from real life examples per se, when people have more better exposure throughout their childhood or working lives per se, they can tend to take these kind of things on to create very good digital businesses because they understand things more from a global regional perspective rather than a local only perspective. Is then it's not very digital, right? It's only a local perspective.
Thank you. Thank you, sir, very much. I hope that question has been answered, and I hope that's your answer you're looking for. Let's bring up the next question from our very own enterprise at APU. Their question is, you mentioned that human or talents are one of the biggest assets for Money Match. What are the strategies, initiatives in place to empower them to continue to grow or innovate, sir?
Sure. So I think I semi-answered this as now during my presentation as well. We have basically a straightforward share option scheme as well, whereby we bring in our top early employees, long-standing loyal employees as well, who's grown together with us, together join us as part of our co-founding team as well, right? So that really solves the majority of the problem once you properly align, their mindsets together with the co-founders like myself. This is honestly an old school solution they use in business schools since 50,000 years ago. Basically, how you want to solve the agent owner problem per se, right? Whereby the managers might not act in the best interest of the owners, in terms of shareholder optimization, because the managers, have their own mandates, interests. But when you have certain share option scheme and you bring them and you make them part owners as well, then you automatically align them to do that as well, right? But to answer a bit of questions on empowering them to continue to grow, innovate as well, I think that it's a lot about the general culture, I guess, and the mindset that you must have and put into place at an early stage, right? So I think that one thing about Money Match per se is that our DNA is a pretty interestingly young DNA. Why I say that is because out of the 90 full-time staff, probably about 8-9 of us are old farts, and there's probably maybe another 10 or so people who are over the ages of 30 years old. About 70 packs are between the ages of 22 to the ages of 28. Wow. So literally, the majority of the company are all just young little kids just graduated, right? We hire so many fresh graduates because of multiple different divisions. The average age, I think, is 24 years old, 25 years old, right? So got a great young culture per se. There are tons of working environment, the balanced workplace environment. A lot of them do a lot of hardcore sports, so much, badminton, football after work, all sponsored by the company, of course, badminton, football, that kind of stuff as well, rock climbing and so on and so forth, right? So the entire culture per se, whereby everybody is really, quite, same age, same thought process, because different departments.
Looks like Mr. Naysan has froze for a moment.
Sorry,
sir, you were freezing for a moment. Yep, loud and clear.
All right, so to answer again, to answer an exact question in terms of empowering them to continue to grow, it's actually really empowering them to continue on to do things like interdepartmental transfers. What we find actually, a lot of young kids who join us, they don't really I'm going to sound like an old uncle. They don't really know what they want. You study one thing per se, you can't enjoy the workplace per se, and like, oh my God, this is what it means to do that kind of job. Doing my internship, I didn't see this part to it. I thought I was just buying lunches for everybody every day, right? So you didn't really see that in real life. And you come into it, or you actually start doing the job of real life and the KPIs and the OKRs. Oh my God, this is not really what I want. I want to move to another department. So that's pretty common, man. Like, for example, they join a department, like, wait, why do I see the other dudes in a certain department, their salary is rising faster than mine? And there's a reason for it, right? We give them, you actually need to do this, you do so on, so and so forth. And then they go about and we actually provide them a clear path to it as well. So we literally have like the kids join us, from certain departments, compliance or finance, so on and so forth. And they say that, hey, one day I want to become a data scientist. Right? I say, okay, to do that, you need certain levels of skills or certain levels of stuff. We actually pay for their courses actually to take on that while not disturbing their BAU. So if you want to do this, you got to work above and beyond BAU. And there's no extra money, nothing per se. You got to work for it, man. But then they're really, really motivated. They do a BAU work, find something per se. They're attending our courses 1 2 hours. And basically, when they are right through it, they take certain tests, and we move them to those departments, right? And then when they prove themselves, we continue on them, motivating them as well. We have people who originally joined us in our client servicing, just a customer service department per se, but that kind of guy or whatever else it is, or girl, has a particular talent in arts, after a couple of years per se, say that, hey, I see I'm pretty good at drawing and so forth, but I have a real interest in UX UI, man. We set it upon a 6-month course, and after that per se, we did certain levels of test validation, and today is one of our main UX UI managers, man. So, but it started off with something totally different per se, using hidden talent per se. We empower them by literally not just encouraging, literally paying for them to do the online courses, but with the promise that they got to work hard for it, right? So we find this kind of strategy works really, really well with the youngsters. Something we've been doing for the past few years, and we plan to continue doing for the next few years, and it's been our primary strategy / initiative to empower them.
Okay. Thank you very much for that. Okay, one last question, final question.
Sure.
From Alvin again, and he's asking basically what's the best way to gather funds to start a digital entrepreneurship?
Oh, well, FAMA, Father and Mother Association.
That's a good one.
So the FAMA, Father and Mother Association, pretty strong association. But all jokes aside, right? Myself and Adrian, we were not young when we started. We already worked for 10, 11, 12 years each. So we had savings, right? So that's why we used to start off our own self, right? But honestly, before, it is a pretty fun, but before you go and talk to anyone else and so on and so forth, but if you don't put your own sweat and blood into it, you're just an employee, man. You're not really an entrepreneur, man. You gotta put money, sweat, and blood. You gotta work another job, take that earnings and put into your startup, and that's an entrepreneur, man. Digital or not, man. Right? So that's whether from day one you go around, that's not really how it works now, right? So raising money from family and friends, if you don't have enough savings, it's a key part. If you can't even convince your auntie, what makes you think you can convince a VC, man? so that's one example as well, right? So family and friends is the best way to get there. You gotta get them to support you as well. If they're not willing to support you, then yeah, man. At that early seed stage, your business is nothing. Your idea is irrelevant and worthless. The only worth is you, your own self. Whoever is going to invest and put in money has got to believe, for example, like you, Willem, or you, Divis, is going to work your balls off or work whatever part of your body off to ensure that you take that money and grow that money. And how can I judge your character if I have no idea who you are? But if I'm your family or friend, I can judge your character better. And I say, I trust Willem, I trust Divis, right? To go there and work hard for it, right? So how can you get the funds from that sense? Because when you want to start off something, everything is worthless except for you are the co-founder, right? That's why I remember the human talent and human skills, right? Like, who are you, right? And how to raise funds if you don't know who you are, right? You can talk a good game. I can work very hard for you, sir. Yeah, say only, right? To give me the money, then within 2 months, you disappear already. Oh, yeah. Why? That's the common scene. There are a lot of scams. So just as there are good, earnest, genuine entrepreneurs, there's so many, asshole scammers, who are taking money away and all that. So how can you expect an investor to simply give up money if you cannot judge your character? Which is why, end of the day, you probably should focus on your family or friends or your own earnings. And that's really when you feel your own pain and you can really grow, take that out to the next stage and really grow yourself as well. So yeah, so that's a bit about it. Pretty old school, I must say. But those are a bit of the harsh realities I must mention when you talk about the entrepreneurship path and whatnot.
Just a very quick question, sir, before I think we wrap this up. You said you and your partner Adrian, you guys started at the age about 30 plus years old, right? We're normally all of us at APU, we normally ask, what is the what do you think is the right age to start entrepreneurial journey? So, in your opinion, sir, what do you think is the preferred age, or the right age?
Well, it depends. So I would say that for myself and Adrian, or even people from our uncle generation, so I'm an uncle now, uncle generation, um, we needed to have 10, 15, 20 years per se. In terms of why is because when you work in a traditional corporation or traditional bank, you are very silo. You work one way up, you work your step by step up, become a manager, you see bigger things, you know, the manager. So I had to go through so many things, I had to manage a team, and then only I could run Money Match successfully together with Adrian, right? But today, the world has changed. You could literally come to Money Match to work, literally move departments after 2 or 3 years, literally become a manager after 3 or 4 years, literally become a senior manager after just 5, 6 years per se. And then that's more than good enough experience to start your own startup. You've really seen money develop. So it's a bit about where you manage to work at. And unfortunately, when you work in large GLCs, MNCs, and banks, you don't really get the kind of wholesome experiences until you become manager level. Then you see more things, you have strategic discussions and all. And then no strategic discussion. But if you work in a startup, like maybe Grab in the early days. Today you work in Grab is also like MNC lah. Grab in the early days. Money Match to a certain extent. Maybe 3 years from now, I also will be like MNC also. You want to get much opportunities, right? But all of us in our early days per se, and we grow. Funding societies in Singapore in the early days very successful as well. So that's the way. These are all financial technology, fintech examples as well, right? So if you go in the early days per se, you get a great wealth of benefits. There's so many ex-Grab senior managers and heads of departments who work with them for like 5 years or 7 years, who've gone on to some very successful startups as well across the region. You can literally Google this as well, the Grab Mafia, all that. So that's versus if I had to work in a bank and work my way up, then I need 10 years, I need 15 years, right? Because I don't see any strategic business decision making. I don't get to manage anybody until I work 10 years and earn my stripes. So that's a bit about the straightforward answer. It's about the value of your ones, but it can be a short, I don't think that a few years is probably enough. If you are fortunate enough to be in certain divisions, like in consulting, for example, and you get sent to your, the place of your client, for example, and you work there for a few months and you're helping them to improve things and all that kind of stuff, then you see things from a different angle, right? Then you can start a startup, for example, IoT startup. You can help a particular sector because you're a consultant over there. So it depends. But if you get that kind of valuable working experiences, then it can be very short. But unfortunately for people like myself, all that I worked in the bank, right? So the first 2 to 3 years is putting yourself out there. Then I managed to get a chance out to Singapore. I get learn experiences over there. I moved to Hong Kong eventually as well. So that is just getting experiences. And then I let a team over there. Obviously let a team over here. They're like, okay, this is how to do management. Psychological, behavioral stuff, and then all kind of things. And it's easy to talk about. If you actually manage people, then you do it better, a lot better. So I'll say that until you've actually been given a position where you're managing people in whatever company you're working at, and for some companies it can be 5 years, some companies can be 15 years. And when you're managing people, then you're ready really to create a company, manage people, right? Hire people, manage people, reward people, retain people, empower people. It's a whole set of human resource, real life management. There's nothing got to do with your technology or your digital or blockchain, or nothing got to do with that. Just good old human resource, man.
Wow, thank you very much for that. I think we don't have any more questions. William, any more questions?
No, I think I'm good.
Great.
All right, awesome. So thank you very much, Mr. Naysan, for your time, clearing your busy schedule. For those who don't know, Mr. Naysan just got back from a trip and he was rushing home to get to join us today. Thank you very much, Mr. Naysan, and your team for that. Also, to all the entrepreneurs and also enterprise club members and other APU students, we actually have a CEO CTO series tomorrow at about in the evening. So I hope you all tune in for that. Without further ado, thank you, Mr. Naysan, for that. Really appreciate you being here today. And I hope, William, we should bring up with a team and make a trip to Mr. Naysan's office. Should we?
I'd love that.
Also, before all of you leave, I would like you to take the QR code. Don't forget your attendance QR code. You just have to sign in, and then your digital certificate will be sent to you. All right, then. I think that's it. Thank you very much, Mr. Naysan. Thank you much, William, and also the team here at Enterprise Wednesday for running the show today.
Thank you.
I hope to see you all soon. You too, Mr. Naysan. Hope to see you soon.
You're welcome. You're welcome. Thank you very much, everybody. Cheers. Bye.
Take care, guys. Good night.